Hello, a very good morning to all of you. I am Mr. Riya Sharma from MBA second year. Extend my warm welcome to one all for our session on tax awareness and tax planning for individuals, organized by S.B.Patil Institute of Management in association with TAXBLOCK India Private Limited. It's my pleasure to introduce Pimpri-Chinchwad Education Trust. Pimpri-Chinchwad Education Trust was established by late Shri S.B.Patil in the year 1990 with a vision to provide value-added educational platform to society in a multiple dimension, right from nursery to doctoral programs in all professional streams, enabling all our students to achieve freedom through education. PCET is S.B.Patil Institute of Management. It is set up in 2009. It is being one of the best management college found in Pune. It aims to provide state-of-the-art facilities to the students that help them to become industry-ready professionals. Finovators Finance Club of PCET's S.B.Patil Institute of Management is a student initiative. The aim of this club is to develop an interest in the area of finance and its allied disciplines. The club conducts various activities. The outcome of this club is the enhancement of the financial knowledge, skills, and professional development. In the recent months, we have conducted various events like a FinTalk, FISUPO, Finovator certification, Finovators learning, Union Budget Review, and today we have came up with a webinar on tax awareness and tax planning for an individual in association with TAXBLOCK India. Introducing TAXBLOCK India. TAXBLOCK India, established in 2019, is a one-step solution for individual taxes, financial compliances, and business solution. Also an ERI of Income Tax Department. TAXBLOCK has its presence at Pune, Mumbai, Bangalore, Delhi, and Hyderabad. It is founded by Mr. Vinit Ugale and Mrs. Madhuri Marne. Our CA Madhuri Marne, ma'am, she is an taxation specialist and works with full of enthusiasm and integrity. She always impresses with her innovative alternatives to simplify financial lives. She is carrying 14 plus years of experience in direct taxation and tax audit. With her cutting-edge expertise, she has been leading direct taxation services for Indian and global jurisdiction for the last 7 years. Now, without letting more time, I would now like to hand over the session to Madhuri ma'am and request her to address our participants. Over to you, ma'am.
Thank you, Yash, and thank you all of you. Good morning and a very warm welcome to all of you on today's session of tax awareness and tax planning. So today, what we are going to do is knowing what is tax awareness, means why tax is so important and how can we plan taxes so that we can save more and spend accordingly. So this session, we will be having various things like what is tax planning all about, importance of tax planning, types of investment avenues, and also in the end, we can have a Q&A session. So moving ahead with what is tax planning. Tax planning begins with the word tax. When do we pay tax? We pay tax when we have an income. So there are various sources of income: salary, house property, business, capital gain, and others. So there are various sources. So we have to bifurcate those sources into these 5 buckets, and then we arrive at the total income. So on totaling this, we have a total income, and then we apply the applicable tax rates depending upon the kind of individual or person we are. Being a non-senior individual, we have a different tax rates. Being a senior citizen, we have a different rates. Non-residents, partners, companies. So kind of the person we are, we have to utilize the tax rates on the income and we arrive at taxes. Now, the most important question here is, do you really want to pay tax on all your income? Some go for tax avoidance. That is, they do not pay tax at all. Some go for tax evasion, that is hiding of income, so there is no question of paying taxes. But what we stress here is go for tax planning. Systematic planning with proper compliances of laws. So if you either do not pay tax or if you hide income, you might land up having notices, paying penalties and interest and fines on all the hidden income. So why to go on that part? We have to show, we plan all the income, makes a declaration of all the income by the planning and enjoy most out of it. Be relaxed. So how we can go for tax planning? So tax planning is of various types. Based on time, I have divided it into two parts. Short-term tax planning and long-term tax planning. Short-term tax planning is the planning which is thought and executed at the end of the year, which means at the end of the year, in the month of March or Feb, we rush up. Oh my God, we have not done any savings. We might have end up paying huge taxes. So take up some instruments and invest it and take claim the deduction. So such kind of planning is although an abrupt planning, but yes, it is also a type of tax planning. Long-term planning. It is chalked at the beginning of the year. The people who are very conservative or very particular, they know what all income they have throughout the year. They chalk it at the beginning of the year and follow it throughout the year. So we generally suggest that go for long-term tax planning if you know what all expenses you will be having through this year or what all income sources you will be having. Most of the times we are particular, we know, we are aware of what all the sources are there. So we can go ahead with the long-term planning. Based on instruments, again, we have two types of tax planning, permissive and purposive. Permissive tax planning means you have to utilize various provisions of the Indian taxation law. These, I'll give you an example to make this understand. For example, ATC. We will be dealing this in more detail. So ATC is one of the deduction where the limit is 1.5 lakh. You can claim this 1.5 lakh by investing in various instruments like 5-year FD or ELSS or natural savings scheme or national pension scheme or NSCs, the Sukanya Samruddhi scheme, a housing loan principal, LICs, etc. So there are n number of instruments. So any of the instrument you choose to claim ATC deduction. So this is called permissive tax plan. Now, what is purposive? Purposive is a way where the tax saver has some specific purpose in his mind in order to obtain the maximum benefits. Means, with the same example, the last example which I have given of ATC. So, instead of randomly choosing the instruments in ATC, he will think, oh, which is giving me more return? Should I go for 5-year FD, which is bearing 5% interest, or should I go for ELSS, which can give me 10% return? So both the instruments are definitely now giving me a deduction of 1.5 lakh, but at the same time, the future profits or future returns are also maximized. So such purpose the tax saver think, and then he specifically choose the instrument. So keeping the mind the purpose, whatever he has, he fulfills the selection of instrument. So such kind of tax planning is called purpose. So you should always go for long-term and purposive tax planning. So tax planning helps you to utilize the deductions in the best possible way and minimize your income tax liability. Now see how. There are various tools of tax planning. We have jotted here only 6 of them. First is Section 10 benefits. So most of the salaried friends can avail various benefits from the various allowances they have in their payslip. So I'll discuss this section in the next slide. Similarly, deductions. Deductions are there listed down in the chapter 6. There are various deductions like ATC, ATD and all. I will be discussing this in more detail in the next slide. So if you maximize the benefits of these, then you can maximize the returns and minimize the taxes. Third, a most important point is housing loan and tax benefit. So generally in India, what happens? Whenever we purchase a house, generally we purchase it in a dual name, in the name of yourself and the spouse or yourself and the father or mother. So dual name. Why? thinking that array in the future something happens to me, it easily, without any hustle, goes to my partner. So you are claiming this as a joint property and you do not utilize this thing in the tax way. Now, how you can utilize it? By bifurcating that property in your both the names. Like you define the percentage of holding. It can be 50-50, it can be 60-40, 70-30. Why so? Because if you're purchasing that property, you might be having loan. So loan has two components, principal and interest. Interest component can be claimed in a different section. The limit is 2 lakh. Principal component is claimed in the different section. Limit is 1.5 lakh. So in the initial years of your home loan, the interest component is very high. But for you, the benefit is restricted to 2 lakh only. So if you have a joint property and you define the percentage, it becomes a co-ownership. And you both of you can claim the benefits to the maximum of 4 lakh. 2 lakh in your name, 2 lakh in the partner's name. It can be spouse. So in this way, this was just one example. If it is a rented property, you can bifurcate the rent in both the names. Suppose you are having the higher income, spouse is earning lower income, you can claim 30%, she can claim 70%, and this way you can maximize the tax benefit. So this is a very important section where you can maximize your tax planning in the best way. Fourth, again a very important point, capital gain from the sale of house property. Most of the time, whenever a person is selling a property, he needs a tax companion. He takes suggestions from many people. Yeah, when should I sell this? What is long term? What is short term? What will be the tax if I am having a long term? क्या होगा अगर if I have to invest it into the another property, I have to repatriate. So there are various things related to this. So capital gain is again an important section of tax planning. Next is gifts and tax implication. Whenever you are receiving anything, generally people do not show or declare the gifts in their return, which is wrong. Most of the time, gifts which are received from the relatives are exempt income. Show that exempt income in your return. Whenever you are utilizing that exempt income, you are declaring the source beforehand to the department. So in future, any tax implications come, you have the proof that I had declared that exempt income earlier. So most of the time people have questions, when should I go for gift deed? If my son is abroad, he is repatriating money for my maintenance, will that be taxable for him or for me? So such questions are catered while doing the tax planning of gifts. Next is planning through mom, dad, spouse, and children. So planning through mom means you are planning through the relatives, the intimate relatives, like booking FDs, booking properties, making some account. So these things are also a part of tax planning. Apart from this, there are various questions that I'm leaving India, my posting has gone abroad. Will my residential status change to non-resident? What is global income? How global income is taxed? What is DTAA? So all these things are part of tax planning. So friends, whenever you are getting anything or you're paying anything, inflow and outflow both should be recorded in a particular way. Go for tax planning so that the taxes are not bounced back to you, but those are planned and you are aware of it. Next is components of salary. So as I mentioned, my salaried friends, you have to scan your payslip. You have to see what all allowances you are getting from your corporate, what are things or benefits you are getting from your corporate, and how you can maximize these benefits. For example, there are various allowances which you might be receiving. The most commonly used allowance is HRA, house rent allowance. So this is almost 99% of salaried employees do get HRA and they are also utilizing the benefits of HRA. But there are various things connected to it which we do not know and hence we utilize it to the lowest. For example, suppose you are getting an HRA of 25,000 and actually you are paying rent of rupees 10,000 or 15,000. So somewhere in the back of the mind you will think that I am getting 25,000 as HRA, I am paying 15,000, so I am saving 10,000. which is wrong. So that 10,000, whatever you are utilizing, based on that, the exemption is calculated, and on the balancing figure, you are paying taxes. So it is not exempt or you are not saving anything. So first thing, whatever HRA you are getting, you should make use of it to the fullest, else you are paying taxes. So you have to make tax benefit analysis and choose accordingly how to go about it. There are various questions also. Most of the time people have questions like how should I claim HRA? So while the declaration is going on in your company, declare that I am paying so much of rent. And after that, while submission, submit the rent agreement or go for rent receipts or for bank statements that you're paying through the banks. Also, whenever you are staying with your parents, you can make a rent agreement with your parent and you can claim HRA also. Most of the time, people have questions that I am having home loan and HRA, can I claim both? If you are actually paying rent, definitely you can claim both. Next is LTA, leave travel allowance. Most of the time, people forget to claim this allowance. Why? Because in the block of four, you can claim only twice. So most of the time people forget to claim it. So what is this all about? It is regarding the leave which you have received from your employer and you have utilized that leave to random out in the India. So any vacation, generally every year you might be going with your family, you can claim this allowance. You can keep the bills and submit it to the employer to claim this allowance. Apart from this, there are various other allowances. So this is a subjective part. Whatever allowance you get in your payslip, like conveyance, it can be anything. So all these allowance you should utilize it. If you're not utilizing it, you are paying taxes on the same. Similarly, there can be various reimbursement, uniform or books and periodicals, food coupons. Many reimbursements can be like car reimbursement, petrol reimbursement. So if you are getting those benefits in your offer letter, you should utilize those benefits so that you can, all these expenses, you are either way doing it. So why not route it through here and claim the benefit? So this is a scanning of payslip. Apart from this, there are various deductions which are very important. Most popularly used deduction with all salaried employees is ATC, like life insurance premium you get here. So maximum limit of ATC is 1.5 lakh. So in LIC, you can claim here provident fund deduction. So your contribution, whatever you are doing, is gets considered over here. Children tuition fee, CPF, ELSS, Sukanya Samriddhi Scheme, National Savings Scheme. There are various limitless instruments which you can utilize over here. 5-year FD is also there. Post office time deposits are there. So any of you can choose it. While deciding, you can see that your PF contribution first you have to reduce from 1.5 lakh, and then you have to think of the remaining amount how you can utilize it. You can also utilize the children tuition fee, life insurance, etc. So all these, while choosing the instruments, give it a thought before choosing instrument. Don't choose instruments randomly. Give you, for example, life insurance. Generally, if you go for a life insurance of 5 lakh or 10 lakh, generally the tenure of the same is 15 to 20 years. So if you are having 5 lakh insurance, life insurance, what is the premium which you are giving? It will be somewhere 35,000. So every year for 15 years, you're paying 30,000. And at the end, how much you get or something mishap happen, what you get is 5 lakh or 10 lakh. So is that really worth of it, of your life? Will your family really suffice for at least a month or two with that money is the question. Does this give you a rise that you should also go for term insurance? All these things, questions, definitely ask yourself before choosing any instrument. Next is ATD, very important section is a Mediclaim insurance. Most of the time, many corporates provide group insurance. So we generally do not go for individual Mediclaim insurance, but which is wrong, which you should always go for. Why you should go for? Because it generally gives you a family floater. So even if you not, it will support you for the additional amount of support if required in case of any admission. Also, after COVID period, prior people were not much interested into this, but post COVID, most of them have realized the importance of having Mediclaim and they have gone for it. So the limit for the same is 25,000 for self, spouse, and family. and additional 25,000 for parents if they are dependent. In case of senior parents, or if yourself or one of them are senior, then the limit changes to 50,000. Also, very important thing that in case of senior parents, generally we struggle a lot to get medical insurance. So, government has allowed us. If you do not have mediclaim for your senior parents, don't worry. You can claim medical expenditure to the extent of 50,000 under ATD. So this is also very important deduction, and you should also go for it. It is also suggested that at a young age you should go for these investments because the premium amount is also very less, and you can enjoy these benefits at the time when you really need them. Next is ATE, interest on education loan. Most of the time people forget that this is also a deduction. If you ask me the limit, there is no limit for the amount. Any amount of interest, whatever you are paying, entire amount you can claim under ATE from the year of loan till 8 years. Next is home loan. I have already explained that home loan is a very important point. It has various aspects related to it. It has EMI, which has two components, principal and interest. Principal component falls under ATC, where the limit is 1.5 lakh, and interest component falls under section 24, the limit is 2 lakh. So home loan has various criteria, whether your property is self-occupied, whether it is under construction. In case of under construction property, you cannot claim these deductions until unless you get the possession. And also the limit is towards 2 lakhs. So if you are having a joint loan or a co-ownership is there, you can utilize these benefits to the fullest. So go for planning and think how you can utilize whatever expenses you are actually doing. ATEE I have mentioned over here because there are additional sections. If your 2 lakh gets exhausted under section 24, that means if you have more than 2 lakh, the interest which you are paying, you can claim the additional 50,000 under ATEE if you fulfill the underlying conditions of ATEE, like the loan is up to 35 lakhs, the value of property is below 50 lakhs, various other conditions are there. If you fulfill those conditions, you get the additional deduction. So these are small deductions which I have mentioned, which are majorly used. Apart from these, saving interest, ATTTA. For the non-senior citizen, the limit is 10,000. Most of the time, people do not show saving interest in the return, which is incorrect. Show the saving interest, take the deduction. It is up till 10,000, it is deductible. So you're not paying taxes. So generally, in saving interest is very low. So show that income, claim and declare and get the deduction. So it becomes a declared tax-free income if you have interest amount below 10,000. Next is new regime versus old. So this is also a hot topic of this year's tax planning. People doesn't know which regime to choose. Generally, what happens? If the colleague is going for old, I will also go for old. If colleague is going for new, I will also choose new because we both have the same CTC. That doesn't mean that you two have the same salary. So the regime should also be same. Both of your expenses can be different and your claim and his claim can be different. So for you, new regime is beneficial and him, old regime can be beneficial. So this is a subjective question. Don't go like that. Go for planning, check which regime is beneficial and then you can go for it. So I have jotted down two major differences between these two. The first is the slab rate. If you see the slab rate, up till 5 lakh, both the regimes are same. Above that, in case of new regime, for every additional 2.5 lakh, the rate increases by 5%. So if you are having 11 lakhs as your taxable income means after deductions, then if you calculate the tax, so under old regime, it will be somewhere 1,42,500. Under new regime, it will be somewhere 95,000. So if you see this first instance, you will think, oh, wow, new regime is really beneficial. But hold on, which is beneficial? Here lies the second difference, that how did you arrive at 11 lakhs of taxable income? The second difference between the two is removal of major deductions under new regime. You cannot take ATC You cannot claim ATD under new regime. Similarly, removal of major exemptions like HRA, LTA, you cannot claim under new regime. So, after considering these points, you arrive at the taxes under both the regimes. Then you should decide which regime to choose. So, for the people for many years who have maintained their financial portfolio, considering ATC, considering education loan, all these things, which you cannot claim under new regime, they are likely to pay more under new tax regime. So, but this doesn't mean that it is always bad to have choosing a new regime. It is not like that. For some of them, definitely we have seen that new regime is also beneficial. So there are various investment avenues taking saving instruments of ATC. Have divided it into three parts. Market linked scheme means which are fluctuating, the returns are fluctuating as per the market response. So in this, we have two types, ELSS and ULIP. ULIP is not uh, much looked upon because people find the returns very discouraging. But yes, those who are very aggressive go for ELSS and they get very good and promising returns. In case of fixed income like PF, PPF, NSC, infrastructure bonds like NHAI, REC bonds are there. Tax saving FD means 5-year FDs are there, senior citizen savings schemes, etc. So people who are very conservative, they go for such instruments. They think booking FD is good, it's safe, but you have to rethink what are the interest which you are getting. For example, on the 5-year FD, you are getting 5.5% interest. So you think that I am getting fixed 5.5% without any tension, go for it. But that is not the scene. You are paying taxes on that 5.5%, and post tax, you should decide how much you are getting. So there should be a mix and match of market linked and fixed income in your instruments. Then you can have a steady income. Others are nothing but the expenditure which you generally claim for future benefits like LICs, housing loan principal, children tuition fee. These also you can claim under ATC. So entire all these things combined together, maximum what you can claim is 1.5 lakh. A comparative study on FD, equity, and debt I have posted here to make you understand how FD works, how debt instruments work, how equity works. So rate of return in case of FD is generally 5 to 6% these days. In case of debt, it is above that 7 to 9%. In case of equity, yes, you can see good returns up to 11% to 25%. Although those are related to market, but most of the time we can see these good returns. Dividend option, we do not have dividend option in case of FD. Yes, there is an interest. In case of debt and equity, yes, you have dividend options also available on some instruments. Risk, there is no risk in case of FD. There is lower risk in case of debt instruments, high risk in case of equity. Similarly, if you go for liquidity, lower liquidity in case of FD, they have fixed thing. Otherwise, you have to submit the surrender value. It is lower, and some charges you have to pay if you want to break your FD. In case of debt instruments, moderate liquidity is there. And in case of equity instruments, high liquidity is there. You can sell it off and turn it into money as soon as possible. SIP option, if you see, there is no SIP option in FD. Entire amount, a lump sum amount, you have to invest in the FD for a specified period and then only you can withdraw it. Debt instruments and equity instruments, in both the things, you have SIP option available. That means every month you can invest small figures, which in future becomes a huge corpus and that can give a good return. So I'll discuss about SIP in one of the slides. Taxation, if you see, FD income is taxed as per slab rate. So if you're on a 20 or 30% slab, then this interest is also again taxed at 30%. So generally on this interest, if your total interest for the financial year exceeds 10,000, TDS is deducted at 10%. So additional 20% you're liable to pay in case of FD interest, and if you fall under 30% slab. In case of debt instrument, short term is taxed as slab, long term is taxed at 20%, irrespective of your own slab. this is taxed at 20%. If you go for equity, short term is taxed as 15%. Generally, these equity are traded into the market, so STT is paid on these. So the rates are lower. Short term is taxed at 15%. Long term is taxed at 10% above 1 lakh. So if your income, if your profit from these equity is above 1 lakh, the additional amount is taxable at 10%. You can plan that your income stays below 1 lakh every time. So that will be exempt. So there are various plannings. So whenever you're choosing instrument, keep all these things pointers in your mind. So depending upon the risk and return, you choose the instrument and go ahead. ELSS and NPS is also a comparative thing. People confuse between the two, which is better. So in ELSS, minimum amount is 500, whereas in NPS it is 1000. The benefit in ELSS maximum what you can claim is 1.5 lakh under ATC, whereas in NPS 10% of basic you can claim under ATC, and additional 50,000 you can claim under ATCCD 1B. So total benefit of investment in NPS you can claim maximum up to 2 lakh if you plan it well. Tax implication, if you see, ELSS are nothing but equity linked savings schemes. So the returns are taxed as per equity. In case of NPS, it is an exempt model. So on maturity, it is tax free, and 40% goes into annuity and 60% goes into maturity lump sum amount. So this is an exempt thing. Withdrawal, premature withdrawals are not allowed, whereas the lock-in period is 3 years in ELSS, whereas in NPS, lock-in period is 10 years, but again, even after 10 years, your age is important. If you have attained the age of 60, you can withdraw everything. Otherwise, 40% goes to the corpus and remaining amount can be withdrawn. So there are these concepts which you should know and choose the instruments like that. So other investment option, as I had mentioned, SIP. SIP is a very good model. It's a modern RD that auto debited from your bank's account on a specific date. This SIP is generally related to certain kind of mutual fund. There are various kinds of mutual fund, which is equity oriented mutual fund and equity oriented, debt oriented, and hybrid. So depending upon the risk, you can go for it. If you are ready to take high risk, you can choose equity instruments. If you are ready to take lower risk but good returns, you can go for debt instruments and likewise. So the earning, whatever you get, are again reinvested to generate good returns. So it is invested and reinvested. It is generally advisable that go for SIP with a long-term perspective. It gives good returns because it helps you to create a steady corpus, although it is subjected to market risk. But long-term SIPs, if you see, those are really very beneficial. So I've explained this with a small example, generally with an average SIP, which bears a 10 to 12% return. Suppose I am going for an SIP of 5,000. So every month I am investing 5,000 each. So in the end of year one, my cash outflow or my investment will be 5,000 into 12, which is 60,000. But if you're considering this return, the value will not be 60, but somewhere near 63,000. And if I continue this SIP till 15 years, why 15 years I have considered? Because if you go for home loan, tenure is 15 years. If you go for LIC, it is 15 years. Any kind of loan you go, or term insurance or insurance you go, the tenure is generally for 15 years. So why not this also for 15? If you see for 15 years, if I continue this SIP, my cash outflow will be 5,000 into for 15 years into 12. It will be somewhere 9 lakh. So the value will not be 9 lakh. Value will be somewhere 23 lakh. So you see, this is growing. So SIP is generally thought as a very good way of instrument. Everybody at least for 500 or 1,000 rupees should go for SIP and check how it works after 3 to 5 years. So going out to summary, just as earning income is important, below things are very important. You should have proper savings and investments. Go for tax planning, timely income tax return filing. If you file your returns timely, your compliance module becomes compliant and you get help in various things like taking loans, making out visas, and various other things. So budget updates, if you ask me, this budget is not having any much changes to the income earners, but yes, virtual digital currency has been launched or will be launching soon by RBI, and various tax regulations are shown with it, where 30% tax is applicable on the same. So we have a tax partner with us. I hope Pooja is also there.
Hi, Madhuri. Hi, I'm there.
So I would be handing over to Pooja. She is an expert in explaining how you can use various investment modules. Over to you, Pooja.
Thank you, Madhuri. Good morning, everyone. And Madhuri, thank you for sharing so much knowledge. So while, since being able to manage and optimize money is as important as earning it, I'm so glad we had this session. And I'm going to walk you through various ways to implement this knowledge that we just received. So what you see on screen is MoneyFi. MoneyFi is a platform launched by Tata Capital. You also see a QR code. I would request you all to use this QR code, scan this QR code later, and install and start investing in mutual funds. But why are we scanning the QR code? Is it not available on the App Store? The app is available on all the app stores. It's just that we would like to reward all the attendees of this session with the 500 rupees Amazon gift voucher once you start investing in mutual funds. So that's like, one small step or one small bait to really start implementing the financial knowledge that we are receiving. If you could just go to the next slide, please. So what you see here is the categories that MoneyFi deals into. So MoneyFi has investments, it has loans, you can apply for insurance, and there is a very unique feature called calculators. MoneyFi has a fully digitized process with KYC. You can create and identify your personalized financial goals. So, your education goal, your marriage goals, your, a child's education goal, everything can be, you can feed in the details, feed in the amount that you would need later. And the calculator will kind of the AI will throw values that you need to start saving on a monthly basis or on a lump sum basis, whatever suits you better. MoneyFi has mutual funds across equity, debt, and hybrid categories. You can track portfolio returns in real time. Yeah, you can apply for your personal loan, for your education loan, for your home loans. You can even apply and avail insurances for your health, for your general insurance. So it is, we have basically tried to get all your individual financial needs on one platform, backed by the strong research team of MoneyFi and Tata Capital. If you could just go to the next slide. So MoneyFi came into existence around 2020. And the users' age range is 25 to 55 years of age. We are present across 1,000 plus cities, 12 lakh plus downloads, 1,500 plus mutual fund houses that are listed, and we have opened 60,000 plus investment accounts with a support team of 40 members. This is only to show you some credibility of the app and how you can really use it as your one-stop solution. As I said, it's a fully digitized process. So it takes only 5 minutes to open your investment account. There are 4 simple steps to open your mutual fund trading account. You will only need to keep your bank account details and a signature ready. Now let's assume you are a first-time investor. So, you're not investing in any mutual funds through any provider. Then maybe you will need to do some additional steps. That's basically uploading your address proof and your Aadhaar card. And that's all. You can just sit and relax and we process your request. And within 2-3 working days, your investment account is open. Okay. So when we move on, I will take another 5 minutes to only give you a quick walkthrough of the app, so that you're not new to the platform and you're not too lost, because already with the plethora of options available to invest, we are all over the place. So could I get the rights to share my screen, please?
I think you can share, Pooja.
Yeah, I'm just doing that. I think there is a problem. Just give me a minute, please. Let me know when you can see the screen, yeah? I think my screen is visible now.
Yes, yes.
Super, super. Okay. So I have already registered and onboarded myself. So I will have to skip the first few onboarding steps. But I would just like to take you through, how you can choose and start investing without really having too much of, in-depth knowledge of which fund is performing, how do you do the research. We've kind of put everything in place here. So say I'm new to investments and I don't know how to start. So we can do a very simple thing. We can go to SIP, invest in MoneyFi top picks. These are basically top 3 fund houses that MoneyFi's team recommends, okay, across the equity, debt, and hybrid markets. But let's say I'm not convinced. I want to look for more and I want to invest in tax saver funds. So you can go to investments, and we have kind of categorized these funds, because not all investment houses take investments of 500 rupees. We have categorized them differently so that you can start with 500, build the confidence, and then start increasing it year on year. But let's say I want to go to top rated funds, and so this everything is backed by Morningstar and Value Research. Okay, these are top rating agencies for the mutual fund. And say if you go to see in last 3 years, Access Mid Cap Fund is giving the maximum returns. So say I want to see what else is there in Access Mid Cap Fund. What has it performed in last 6 months? It is performance in 1 year. Okay, let's say I'm convinced I want to start investing. I'm assuming I'll start with say 3,500 for a period of 3 years, with an average return of mutual funds is around 12%. So we will leave that there. Okay. Now, at the end of 3 years, I would have invested 1,26,000, but what it has actually become at the end of 3 years is 1,50,000. I think that's great. So let's go. The more avid investors can read more about the fund houses, can read more about the fund managers. So if you see, Shreyas Devalkar is the fund manager here. He manages 3 more funds. You can read about Access Mutual Fund as a whole, and say I'm convinced I want to start investing, and I invest now. Okay, it is as simple as this. You put in your SIP amount or a one time, whatever you prefer. You put in the investment date and it's a proceed. Your investment really begins. So, while in the earlier days when we had to rely on these expensive wealth managers to start investing in various options, now everything is at a click. That's what I was trying to say here, and that's why we bring MoneyFi to you along with TAXBLOCK. So that's about it from my side. Please let us know if you all have any questions regarding MoneyFi, regarding TAXBLOCK. We all are here to address your queries. Over to the audience and TAXBLOCK too.
Hello guys. If you have any questions, you can put it in the chat section.
it's a very good forum to clear all your taxation and investment related doubts. It's very rare an opportunity that everybody can get. I'll really encourage you all to come up with any doubts, any small questions that are arising in your mind.
Hello, madam. Hello.
Yes, Anil.
Yes, please go ahead.
MoneyFi invest through direct plan or a regular plan?
We are a regular mutual fund provider, Anil. We have an ARN
Okay.
and hence it's all regular.
Okay. Thank you.
Okay.
Any other questions?
Hello.
Yes.
Actually, I just want to ask, so if we start investing in SIP, so as we know that there are mentioned it is subject to market risk. So how it will affect our investment, and if the rate of return will fall down in that case if the market goes down, and will it affect our investment in the years to come?
Madhuri, should I leave that question to you?
Okay, no issue. If you want, you can take it.
No, please go ahead. Please go ahead.
Okay. So generally what happens, these impacts are accumulated throughout the year. So if you see or study the market for past 3 to 5 years, it is growing every year. Although you can see it is falling down, but the effect of growth and the fall does not impact much on these such kind of SIPs. So you can, before investing into the SIPs, you can read the past history. You can start an SIP with a new fund offer also. So you start with a base rate, and generally it is growing up and up. So it is seen for so many years that most of the time people get good returns in SIP. We have found that very less people are there who who have losses in investing into SIPs. If you study well, go for planning and take some suggestions, and then you invest, then definitely we have seen that there are very low cases where we can see losses. If you're doing direct share trading, it's a different thing. But if you're investing into mutual fund, plan for longer period of time, generally we get good returns. So even if it is subjected to market risk, instead of giving 20%, it can give you 10% returns. It's like that. Hope I answered your question.
Yes, thank you.
Yeah.
We have one more question from Smita Sonavne. Her question is, if his son or daughter take education loan for higher education, then shall she show that amount under 80E section?
Yes, definitely. That is the only thing. The interest amount what you are paying on that education loan, that you can show under 80, not the principal payment. The interest payment what you are making, that figure can be shown under 80.
I have one more question. So, if you are investing in FDs or RDs in through the bank, so but you are not as a salary person, you are just investing through your parents. So, so will that also come under the tax, or you
Yes,
can
so
exempt it under?
yes. So all these, any income which you are getting, so what you are getting in refund is the interest. The income is nothing but the interest. And all these interests are taxable. Either it is on FD or RD. So all these things are taxable. But if you go for SIPs or suppose ELSs, so such SIPs, the income which you get up till 1 lakh, it is not taxed. And that too if it is long term. So if generally you would go for long term only. To the extent of 1 lakh, it is not taxable. Above 1 lakh, 10% tax. But in case of FD and RD, your slab rate, whatever is the last slab you are falling in, that gets applicable to these interests. And these returns are not very good. These are somewhere 4.5%, 5%, maximum 6%. So, and after tax, if you see what you get in the hand is somewhere 3.5 or 4%. So for so many years, you will stuck the money and you will get this return. So after considering the inflation, this return is not good return if you consider that. And if you see the market returns, considering the inflation, it may be somewhere a break even or at least above the break even.
Okay. Okay. So means that the TDS is deducted. That is the tax, right? So the
Not
TDS which is
on not on all FD TDS is deducted. If your interest on that FD exceeds 10,000, then only TDS is applicable. Although the income is taxable, but TDS is applicable after the interest exceeds 10,000. It is like that.
okay. So that income which is taxable. So when it will be deducted, it shall get
It will
deducted
be,
automatically or
yes,
anything.
yes, it will be deducted automatically by the bank and that figure gets reflected in your form 26AS. So when you're filing the income tax return, consider these TDS and pay the differential tax only, not the entire amount.
Okay.
Yeah,
Okay. Thank you.
thank you.
For further questions, you can reach us to our Finovators or TAXBLOCK India.
Yes, you are on mute.
Hello. Yeah.
Yes.
For further questions, you can reach us on a Finovators Club or you can contact the TAXBLOCK India. The details are given in the chat box. So ma'am, I request you to switch on your camera.
Yeah.
Pooja ma'am, you also.
Yes, sure.
On behalf of SBPIM, we give a really heartfelt vote of thanks to our guest speaker Madhuri Marne ma'am and our Pooja ma'am from MoneyFi by Tata Capital to
Thank
spend
you.
her busiest time gracing the occasion. Today we had the opportunity to hear your views and this is definitely helpful for all of us. Also, I would like to thank Finovators Finance Club faculty coordinators and student coordinators for coordinating the event. I thank to all the faculty and staff members who directly and indirectly keep encouraging and supporting us. I would like to express my gratitude to our respected director, Dr. Kirti Dharwadkar ma'am, for providing such amazing session for us. Pimpri Chinchwad Education Trust and our partner MoneyFi by Tata Capital. Also, last but not the least, I thank all the students for being highly attentive and interactive today. We are also sending feedback link. Kindly give your feedback. Thank you so much.
Thank you, all of you.
Thank you, everyone.
Thank you, ma'am.
Thank you.